Uh-oh, guys, look at that. The markets ended up going red, well, except for the Russell. The Russell did pretty well today, up 0.4%, but even that lost a lot of its gains. At one point, it was up 1.5%. I think at one point, all the indexes were well in the green. And then, well, once we got the press conference, the FOMC statement, all that good stuff, really, it was the press conference, markets started to collapse. We had the S&P 500 closed down 0.7%. Same with the Dow. Actually, no, the Dow went down 0.8%, as the NASDAQ went down about 0.6%. And again, the Russell went up 0.4%, but still lost a lot of the gain. At one point, it was up well over 1.5%. So we're going to break down the Fed in this video, what ended up coming out of the press conference, and we'll break down the overall markets, do an updated technical analysis here. So if you all find value, hit that like button, make sure to subscribe, and don't forget to get up to 15 stocks for Moomoo. Link down below. We'll talk more about that later. And now, cheers, guys. Let's dive right into the video. So again, when the press conference started, that's really when the selling started into the press conference, right? And before that, when we got the FOMC statement, which came out at 2 p.m., markets were creeping up a little bit, if I remember correctly. Let me zoom in a little bit here, and we'll see. Of course, it was very choppy, but once we got the statement, right, the report, markets started to creep up a little bit into about 2:30 p.m. You guys can see SPY went from 412.30 to about roughly 413.30, so it climbed about $1. Then Jerome Powell started speaking. We started getting choppy. Then boom, right at 413, guys. Not 4:13 p.m., but at $413, that's when SPY really started to take the beating. You guys can see we went from 413.14 all the way down to 407. That was a drop of around 1.3%. And now it's starting to pop here after the bell, up 0.2%. And I mean, that's not much at all, considering, again, we dropped about $7. Well, maybe not 7, more like $5 or $6, heading into close. And Triple Q, if I pull it up, let me show you guys this. This ended up dumping very aggressively as well, as you guys can see, from 321 to about 317. That was a drop of around 1.4, same as the S&P. Now we're popping a little bit after the bell, but nothing crazy there. So let's break down some key points here that I've written down, guys, and talk a little bit about why the markets maybe started dumping there in the last hour of trading. So right off the bat, guys, of course, we got a quarter basis point rate hike, which everybody knew that was coming. We went from 5% to now 5.25%, right? So everybody knew that. That was priced in. That was expected, which is why the markets didn't really do much until Powell started speaking. And there's some key things that Powell was saying around inflation, around, the Fed funds rate, SVB, there's a bunch of stuff he was talking about, which some of that probably obviously contributed to the drop here in the market. So on inflation, guys, he said it will take some time. So, pretty much saying that inflation is a little bit more sticky, or it's pretty sticky. It's not just going to come down. I mean, it has come down a lot, but it's not just going to go straight down with that same velocity moving forward, essentially. That's kind of what I got from that. Inflation is really sticky. He was saying it will take some time, and in that world, if that forecast is broadly right, it would not be appropriate to cut rates, and we won't cut rates, he said, after investors seem to have turned their attention to Powell's comment that the rate setting committee has a quote a view that inflation is going to come down not so quickly. So it's come down a good chunk, but I guess the way I'm interpreting that is, okay, now to get back to the target rate, 2.5%, it might take a little bit longer than expected because inflation is still pretty sticky. And when it comes to SVB, guys, then we'll talk about rate cuts here in a second. He said the run on Silicon Valley Bank was out of keeping with the speed of runs through history, and that now needs to be reflected in some way in regulation and in supervision. So, more regulations maybe down the pipeline now with Jerome Powell saying that. Not because he's saying that, but because of that happening. I mean, who knows? Maybe more regulation does come to the system. We'll see. And he also said, I'm not aware of anybody thinking that this could happen quite so quickly. Well, it did happen very quickly, guys. And it will be up to Vice Chair Michael S. Barr to really take the lead in designing the ways to address them, he added. Maybe, again, going back to that, adding more regulations. And when it comes to rate cuts, guys, everybody is very excited about rate cuts. Maybe not excited right now, but they're looking forward to. That's a better way to put it. They're all looking forward to when they're going to cut rates, when the Fed's going to cut rates. And at this point, we don't know exactly when that's going to happen. We kind of have an idea, maybe a ballpark time period of when it could happen, but obviously we don't know exactly when the Fed's going to cut rates. The Fed doesn't even know that. Nobody knows that at this point in time because everything is ever changing. Data's coming in every single week on something new. And I mean, it's all data driven, data dependent, like Mr. Jerome Powell has said so many times. If Federal Reserve members are correct, it may take some time for rate cuts to seem plausible, said Jerome Powell, which, I mean, again, it's up in the air. They don't know exactly when it's going to happen. It may take some time. I mean, that's coming straight from Jerome Powell, right? And that's probably one of the reasons why the stock market ended up falling. He said, quote, "We on the committee have a view that inflation is going to come down not so quickly. It will take some time. And in that world, if that forecast is broadly right, it would not be appropriate to cut rates, and we won't cut rates." And think about it, guys. The last thing he wants to do at this point, Jerome Powell and the Fed in general, the last thing they want to do is cut rates prematurely, right? And have the economy pretty much boom again, because people are going to be, people are going to be more incentivized to borrow money, go out there and spend a ton more money, right? Which will stimulate the economy. And thus, what would happen then? Well, we would get more inflation, the very problem he's trying to bring down right now. So the last thing he wants to do is, cut rates prematurely. So that makes sense that he's saying that. And I actually like that he's saying that, looking at it from an economic perspective. Why rush and cut the rates? I don't care in the short term if the stock market takes a beating. I'd rather get inflation under control. That's just me. I mean, call me crazy, but I'd sacrifice a little bit of a drop in the stock market for inflation to come down, get under control. Then we can cut rates when we feel it's the best time to do it, not prematurely just to, alleviate some pain right now and, cause the stock market to run. I'd rather have some pain now and, get it over with now. And you know what I mean? And later on, we could focus on the cuts whenever that does end up coming. And he added that demand and labor market conditions will likely need to weaken some more to see progress within non-housing services and deem rate cuts, quote, appropriate, which, again, I agree with that. The labor market is still very hot right now. Unemployment rate's low. It's at 3.5. It's projected to go up to 3.6. We'll get that data on Friday. And make sure to subscribe because we'll talk a lot more about that here coming up, guys. So, yeah, rate cuts not happening anytime soon. Labor market, you guys know, it has to get weaker. It has to, we have to unfortunately see the unemployment rate go up. That's what Powell, at the end of the day, that's what the Fed at this point wants to do. He ended up saying the initial signs of weakness in the labor market suggest that the path to a, quote, soft landing for the U.S. economy is not yet off the table. There are no promises in this, of course. There's no guarantees, no promises in anything, guys, especially the stock market. But it just seems to me, and this is not me, but it's Jerome Powell speaking here, that it's possible that we can continue to have a cooling in the labor market without the big increases in unemployment that have gone with many prior episodes. And I mean, I don't know. Let's just say that's a tough task. And I'm not part of the Federal Reserve, but I've studied economics. I've studied history, right? That's going to be very hard to do. We shall see. We could all be hopeful, but we also have to be realistic at the same time. And he said wage increases have been moving down, and that's a good sign. Down to more substantial, or rather sustainable levels. I think the case of avoiding a recession is, my view, more likely than that of having a recession. So he's saying, and of course he would say this, why would he try and panic everybody? But okay, let's say he's unbiased here, right, or whatever. He's pretty much saying the odds of us having a recession are less than us not having a recession, if that makes any sense. So he's leaning more towards us not having a recession, which, I mean, I hope he's right. We'll see. I don't know. I mean, history says that we could have a big recession coming up. We'll see, though. We'll see. I don't want to be a doomsdayer, obviously, but we're just speaking facts here, guys. And by the way, if you haven't gotten up to 15 stocks yet for Moomoo, use that link down below. Listen, guys, once you open up an account, you get one free share of stock right off the bat. And if you deposit at least $100, you get 4 more stocks on top of that one stock, totaling 5 stocks. Kindergarten math, guys. And if you deposit at least $1,000, you get 10 more stocks, totaling 15 free stocks. Third grade math, or maybe Maybe first grade math. Either way, guys, you get a bunch of free stocks from Moomoo. Link down below. And don't forget, that also helps out the channel. I appreciate you guys as always. Cheers. And now let's talk quickly about the Fed. Powell ended up saying that he thinks that more data is needed to decide if the Fed funds rate is restrictive enough. Meaning, are we going to get more hikes maybe? That could be one of the meanings derived from that. And he also said we're going to need data to accumulate on that. That's not an assessment that we've made that would mean we've reached that point, he said. I think it's not possible to say that with confidence right now. And Powell said that the summary of economic projections from the Fed's March FOMC meeting showed that decisions made up until that point in time had resulted in an appropriate level of rate increases. Powell says the committee will reassess the notion in June. So that's a quick rundown, guys, on what kind of went down today during the press conference, the whole statement, the whole ordeal pretty much. And the stock market didn't really like it. Again, we had SPY, Triple Q dump a bunch into close, and now look, it's actually down even more. Well, not down even more, but we saw a little rally into close. We consolidated. Now we're starting to dump off again. You can see that here on Triple Q and on SPY. That is not looking good at all, at least as of now, for the bulls. So, guys, that's what's going on. The way I look at it is what really caused the stock market to drop today was the fact that he said, A, inflation was sticky. We kind of knew that, but it might take longer than expected for it to come down. And 2, we're pretty much not getting any rate cuts anytime soon. And sure, at some point we will get a rate cut, but at this point it's not the time. And Jerome Powell doesn't want to prematurely cut the rates, which I'm with that 100%, like I said. And that's probably the second big reason, and there's probably some more reasons. But to me, guys, that's what I'm thinking. What do you guys think? Let me know your thoughts down below in the comments. Don't forget to get, again, up to 15 stocks from Moomoo. Link down below. 12 stocks from Webull. Check out the Patreon as well while you're at it down below. And with that being said, cheers, guys. I'll catch you later.